welcome to The Explainer. We're here to break down the big ideas making headlines. So picture this. It's a single evening, October 2025, and bam, the crypto market just gets hammered. We're talking $19 billion. Gone. Vanished in a flash crash. And everyone's left just staring at their screens wondering, what in the world just happened?
Now look, this kind of volatility, it's not exactly new to crypto, right? But a shock like this really brings up a huge fundamental question. Are we watching the chaotic, messy birth of a brand new financial system? Or is this just the final spectacular collapse of a massive bubble? To even begin to answer that, we've got to look at both sides of this fight. So let's start with the people who are absolutely convinced it's all going to zero.
All right, first up, the argument for zero. This is the camp that believes deep down that all of this stuff, cryptocurrencies, are fundamentally worthless. You hear this perspective from some of the biggest names in investing, and their entire argument really boils down to one simple critical question about what crypto is and what it isn't. Okay, so this slide, it gets right to the heart of it. Think about any other asset you might own. Farmland, right? It grows crops. An apartment building, it gives you rent checks. A company's stock, that represents a piece of the company's profits. These things produce something. They create real, tangible value. Now, the critics look at Bitcoin and they ask, what does it produce? And the answer, from their point of view, is nothing. There are no earnings, no dividends, no cash flow, so how can you possibly put a real value on it? So if it doesn't produce anything, why is it worth anything? Well, the skeptics have a pretty cynical answer for that. It's called the greater fool theory. The idea is, the only reason you buy it is because you hope you can sell it to someone else, the greater fool, for more money later on.
And this whole speculative fire gets doused in gasoline. That gasoline is called leverage. We're talking about millions of traders borrowing huge sums of money to make bigger bets. And here's the scary part. When prices take even a small dip, these borrowed positions get automatically liquidated, sold off by the system. That forced selling pushes the price down further, which triggers more liquidations. It's a terrifying domino effect that can absolutely crater the market in a matter of minutes. Then there's the other big elephant in the room, crypto's connection to crime. And what's really interesting when you look at the data is that there's been a major shift. It's not all about Bitcoin anymore. Illicit actors are flocking to something called stablecoins. You know, the cryptos that are pegged to the US dollar. Why? Because they get the best of both worlds, a stable price plus the anonymity and borderless nature of crypto. And we're not talking about small change here. The scale is just staggering. In 2024, they were able to track at least $40.9 billion in illicit transactions. And here's the kicker, that's just what they could find. The real number is almost certainly way, way higher. Okay, so that's a pretty damning case from the skeptics, right? But that is only one side of the coin. Now let's flip it over and look at the other argument, the powerful belief that this isn't a bubble, that this is the ground floor of the future of finance. To really get the believer's point of view, you gotta go back to the very beginning. Why was Bitcoin even created? Well, it was designed to be a totally new kind of money, one that's global, totally transparent, and runs on that thing we call a blockchain. The key idea? No central authority, no bank, no government pulling the strings. Now, if you talk to a crypto proponent, they'll tell you, forget the day-to-day chaos, zoom out, look at the big picture. And when you do, you see this pattern. Yeah, Bitcoin has these insane boom and bust cycles, but, and this is the crucial part for them, after every single devastating crash, it has always, always come back stronger and hit a new all-time high. That, they argue, is resilience. And that resilience is what leads to this big idea of Bitcoin as digital gold. Here's the thinking. There will only ever be 21 million Bitcoin. Ever. That fixed supply, combined with the fact that no one controls it, makes it, in theory, a great place to park your wealth, especially when you're worried about things like inflation eating away at the value of your regular money. It's like a digital safe haven. But honestly, maybe the biggest checkmark in the pro column is this. Wall Street is here. The big dogs are in the game. It's not just a bunch of tech enthusiasts anymore. We're talking about US regulators giving the green light to Bitcoin ETFs. Financial giants like BlackRock and Fidelity are rolling out their own crypto funds. Visa is testing payments with stablecoins. This isn't some fringe idea anymore. It is actively being woven into the fabric of the global financial system. So,
So, okay, we've got two completely opposite stories, right? On one side, it's a worthless bubble. On the other, it's the next financial revolution. But what's it actually like for the people in the trenches trading this stuff every single day? Let's dive into the trader's world.
You know, for a lot of people playing this market, it's not really about the philosophy of it all. It's about trading. It's about seeing an asset that's super volatile and, crucially, doesn't always move in lockstep with things like the stock market. And that disconnect, that's where traders see an opportunity. And remember how we said there are no earnings reports or fundamentals to analyze? Well, that means the market is driven almost purely by human emotion. It's a psychological game. That's why you have things like the Fear and Greed Index, which basically tries to take the emotional temperature of the market. And as you can see, right now, things are looking extremely fearful. So forget the philosophical debates. A trader's screen doesn't have revolution or bubble on it. They're looking at hard data. What's the Federal Reserve doing with interest rates? How many billions are flowing into those new Bitcoin ETFs? What's happening with the economy in Japan? They're piecing together all these macroeconomic clues to try and guess the next move. And this is where the perspective gets completely flipped on its head. For a trader who lives by the charts, a massive crash like the one we're seeing, well, it's not the apocalypse, it's just a retrace. It's a predictable, almost necessary pullback in a much larger cycle. To them, it's just noise, not the end of the story. So, where does that leave us? After hearing all this, we're stuck right in the middle of this massive, high-stakes tug-of-war between two totally different visions of what money is and what it could be. Let's just break it down one last time. On the one hand, you've got the skeptics. They see an asset with no real value, fueled by dangerous speculation and used by criminals. On the other hand, you have the believers. They see a groundbreaking technology, a form of digital gold, that's becoming more mainstream every day and could be the foundation for a whole new financial world. Here's the thing. Both of these stories can't be 100% true at the same time. So what is it? A revolution that will change everything? A bubble that's about to pop for good? Or maybe something else we haven't even figured out yet? The honest answer is nobody really knows. And that uncertainty is exactly what makes this one of the biggest, most important questions we're facing today.